Hello, Security Token Market. My name's Kyle Sonlin, and I'm joined with John Nance, the CEO of Dealbox. John, thanks for joining us.
Thanks for having me, Kyle. It's great to be here with you guys.
Yeah, so I'm excited to dive into this. Can you tell us a little bit about Dealbox and the platform you've built?
Yeah, certainly. So we've been doing this for about 18 years as a service, and initially the business was not set up to be a platform. We've been helping issuers with primary capital formation and think about the way that they go about productizing an offering and taking it to market to raise capital. And so 18 years ago, that was kind of the genesis of it, but in 2017, we redesigned the business to take advantage of securities issuances on-chain, so to speak, or security tokens, so-called, now as digital securities. So Dealbox's platform is designed to help with both primary and secondary issuance for blockchain-based securities.
Fascinating. So you started in the traditional space from a timeline perspective. When did that light bulb go off in your head that tokenization was going to be the future?
It's such a great question, actually, Kyle. I've been in crypto myself since 2012, so I've been following blockchain from afar for a while. Former financial professional, wealth manager, derivatives trader. I've spanned the gambit and all of that, and when the crypto markets first went parabolic in like 2017-ish, I kind of took a step back from my wealth management job, and people started coming at me knowing that I had been in it for a while.
Right.
And they kind of were asking so many questions, and people are throwing out all these applications of what might happen. And, you know, I had the founder of Dealbox at the time come into my wealth management shop and say, listen, I have this cool idea about how we can use blockchains for private capital markets. What do you think about this? And I had an absolute aha moment at that moment in time, and that was around December 2017. So, gosh, 4 years ago.
Fascinating, fascinating stuff. And similar experience from my perspective. I was a trader and got into the space in a lot of the similar aspects, seeing that writing on the wall. But for you, being a financial services provider, what were some of the difficulties from taking it from that aha moment to actually creating the solution?
So many. I mean, it's funny, today we're sitting here and, you know, you guys have this wonderful show, you're informing people about all this stuff, but 2-3 years ago, when these were like theories and ideas and we didn't have the technology, the biggest challenge has always been around education, because people still are really challenged in understanding what is crypto, what is a stable coin, what is DeFi, what is this, what is that. And at the end of the day, it's been our job to kind of educate people and say, listen, you don't know how the internet works, but you know how to use a website. You don't need to know how blockchain works, just understand what it's being used for and leave the rest to the technologies.
And so was that harder to sell, or was it easier to be adopted by the issuers because of the efficiencies and some of the opportunity of it? Like, did they kind of get it quicker than you expected, or was it a longer process because it was a new kind of crazy technology?
Yeah, I'm thinking about like the investors versus the issuers versus like hiring for talent and things, and I would say probably from a talent acquisition standpoint was the easiest, and then probably the issuers, and then the investors, ironically in that order. Which is funny, because that's what some people have been speaking out at the conference today, right? Is it like that was kind of the hierarchy of how the adoption and attention to those various classes has been, right?
Right, which is fascinating, because when you think about it, the investors likely in the future will be the ones driving more adoption because they want that eventual liquidity that maybe some issuers may or may not be comfortable with. The investors might say, look, we need this to happen at some point. It's fascinating.
Absolutely, yeah, and that's honestly from where we sit today, that's what I think is the last domino that's about to fall. And it's just wonderful to see like strong operating companies with great teams, great people paying attention to everything and setting up for that position. Because the last thing you want to have happen is a massive inflow of capital into something that's not ready to handle that capital. And quite frankly, that's what happened in crypto.
And that's what happened with Coinbase. We read that Coinbase was exploring doing a security token instead of an IPO, but they didn't feel that the market was ready yet to actually accommodate a $100 billion company, right?
Man, it's so great you bring that up. I almost forgot about that story, but when I was reading it, I had half a mind to call them up and say, you know what, you're right, thank you for writing this, but at the same time, I wish you would have done it.
You're right, but you're wrong, because you would have been the reason why we would have driven this thing forward.
Right, where is that Minsky moment, right? That final crescendo of oh my gosh, here's a $50 billion company that just issued all of their equity on chain.
I mean, like, that's what, like, the whole SPAC thing was so bewildering to me. It's like, this is literally what we're trying to do, and you're doing a weird workaround for it that, Gensler's kind of coming down on those. So without a SPAC option, security tokens could be potentially one of those solutions.
Yeah, and I'm glad you brought up the regulatory side. You know, in just the last few months alone, you started to notice this uptick in volume of conversation from the SEC. But now it's not just growing in volume, it's coming more horizontally across. And so it's my opinion that I think the regulators of the United States are about to mobilize a massive rollout of reform. And it's going to span the gamut. And at this point, that is another thing where, you know, there are people in crypto that look at this and say, no, we don't want that stuff. But at the end of the day, you want to make sure that everybody's playing by the same rules. That's all. I'm not telling anybody what's right or what's wrong, and that's a whole different agreement and discussion, right? But at the end of the day, it shouldn't be that the DAOs of the world, right, and these esoteric kind of capital raising systems can sidestep the protocols and the regulation that all of us need to adhere to. It's not an even playing field. Right. And that's the problem as an issuer of equity myself, right? I look at these options and I say, wow, I would love to access that stuff, but there's no way I'm going to deal with the SEC in 5 years.
Exactly right. But it's kind of wonderful because you look how the SEC has really kind of not necessarily said that you shouldn't do a lot of these things. A lot of it's just they need to subscribe to securities laws, and that's exactly what we're trying to do.
Yeah.
And so that's kind of the exciting thing about the security token space, especially.
I totally agree. Yeah, it's almost like a reverse engineer, right? Crypto's over here, the securities are over here, and now we're kind of figuring out like where do we meet in the middle? And as soon as that middle is met, the lines then get drawn, and now we know, okay, this falls over here, this falls over here, and there is no gray area. Right?
And so that middle is Dealbox. So let's talk a little bit about what specifically Dealbox is trying to do to bridge that gap from traditional finance to this more blockchain-based tokenization.
That's so awesome because that is exactly what I joined this company 4 years ago to do, is speak the language of regulation and financial professionals and very sophisticated investors, but also be able to have a conversation with the technologists in the blockchain space and figure out how do we build this stuff to match these things. And it's been really wonderful working with our friends here. We're sitting here at this Digital Assets and Securities Conference, right? And we've got our friends over at Vertalo here who were some of the very first digital transfer agent licenses in the United States. And so back to your point about bridging this gap, it's bringing the technology and merging it with the regulations and the compliance to make sure that your finished product plays on both sides of that field. So we've got the efficiencies of the blockchain tech, but we've got the regulatory compliance of the securities world. And if you're going to issue an asset on chain with an expectation of growth in that asset, it's likely a security. So you need to be doing these things.
That's exactly right. That's exactly right. And that's why, I don't know what you're seeing potentially from some of your, the deal flow, but some of these exciting industries of real estate that just have no liquidity options, that it just makes total sense to leverage this technology. We've seen a lot of real estate here in this conference, as well as I'm from Miami, and in the Miami area, we see plenty of real estate brokers that are exploring this technology, and so that's an obvious use case. Where else are you seeing this potential application really taking hold?
Yeah, it's interesting. I mean, real estate makes the most sense when you look at the advantages of blockchain at a superficial level. But as you start to look at various strata of the capital markets, now you start to pick apart, okay, where else can these applications fit? For us right now, one of the biggest things that we're focusing on is, and it's very timely as a matter of fact, so there's a number of companies in the United States OTC bulletin board markets that are subject to what's now called this 15C 211 notice, which is basically an enhanced requirement for reporting and compliance of the information that they disclose to their shareholders. Well, a lot of these companies are not prepared to issue this updated compliance, this updated guidance. And so effectively, the brokerage firms of the world sent out a notice to these companies and said, hey, if you don't do these things, we're delisting your company effectively. We're freezing your trading. So what started as an initial kind of, hey, we're looking for some more guidance from you guys, and this was back in May of this year, morphed now into over 4,000 of the 12,500 companies listed on the OTC markets today that are in jeopardy of their stock being completely frozen.
Wow.
So today, what we're helping companies think through is, if you're still running a strong business and you are in compliance, but you're having trouble with the regulators and this trading of your stock and how it's being treated in those environments, you need to figure out how to digitize your shares and move them into a more beneficial liquidity venue, such as an alternative trading system.
Yeah.
That is where we see the biggest application outside of real estate today, just with the fact that the OTC markets are completely falling apart in our opinion.
So
we look at it as, basically like the ATS world has the ability to completely replace the OTC market.
Interesting. That's fascinating stuff. I know that T0 is here at the conference as well. They're going to be listing American Films, an OTC company. They may potentially be creating a highway for additional assets. I'm sure you're well aware of that and that process. So this is fantastic. Really appreciate the time. I'd love to continue these conversations. We'll have to speak again. And thanks for joining us.
Oh, it's my pleasure being on, man. Thanks for having me.
All right, John.
Thanks.